Yes, hi and welcome everyone for the next presentation of this seminar. My name is Daniel Thorsson, analyst at ABG, covering IT and tech companies. And the next presentation will come from Proact and the CFO, Linda Hölje. So very welcome, Linda, and please go ahead with your presentation, and I will have some questions in the end.
Thank you so much. I think you can go to the next slide right away. So as Daniel said, I'm Linda Hölje. I'm the CFO and the head of investor relations for Proact. And I planned on giving a short introduction to Proact for those of you who may not know us that well. Then talk a little bit about our market and the key trends we see here today. Then our strategy, how we're capitalizing on those trends. And then I will end with a quick summary of our latest financial results is the plan. So if you go to the next slide, we'll get right onto it. So Proact, we've been around for almost 3 decades now, working to help our customers driving their growth and value through IT. That's our focus area. We deliver products and services to customer all across Europe. You have the map here where we have our main locations. Our target segments are medium and large enterprise customers as well as public sector customers, and we have approximately 4,000 customers presently. We are a 350 million euro company, approximately listed on the Stockholm Stock Exchange since quite some time back. And we deliver, of course, our value through our highly skilled workforce. We employ around 1,100 employees across all of our European locations. So if we go to the next slide, I think what we are seeing is that, and I think not only us, but we all see this, that the industry is in a state of transformation, primarily driven through digitalization, and data is the key to this transformation. Data is what we are specialized on, and we're building our strategy on 3 defining trends that have been around for quite some time. The first one is exactly this, the digital transformation. To see most businesses these days drive their innovation through IT and through digital transformation. And to do that, they need, of course, access to their data, and that access needs to be fast, flexible, with high availability. And that is typically done, we see as a major trend through hybrid and multi-cloud solutions. So going away from the old on-prem dedicated platforms to a mix of on-prem solutions, private clouds, and public clouds, the ones like Microsoft Azure, or Google or Amazon Web Services. And on top of this, we see that the cybersecurity threats become increasingly important or big. So cybersecurity is increasing in importance, as well as data compliance through different types of regulations, such as GDPR in EU, for instance. So these trends we are capitalizing on and have been for quite some time. We do see more recently some shifts in the market dynamics. We see that as IT becomes key to digital transformation, it's also becoming more of a strategic focus area for the business. So decisions are moving away to some extent from the CIOs to the business leaders. With COVID-19, of course, there was an acceleration of remote working, and that in turn accelerated demand for connectivity solutions as well as security solutions. We need to secure remote workplaces as well as offices. Then more recently for us, we didn't see full effects of this until fairly late last year, actually. The global semiconductor shortage, that's impacting us. It remains a challenge. We still have a big backlog that we're pushing ahead of us, or bigger than usual, since our suppliers in turn have had and are still having very long lead times for certain of the products that we sell to our customers. It's still there, but we're starting to see indications that it should improve during the second half of this year. But then on top of that, now we have, of course, the Ukraine war that's impacting us all in different ways. I think for Proact, there is no immediate financial impact, but of course, the general global uncertainty and potential effects on the global economy may have effects on us, as well as increased interest rates and acceleration of inflation, leading to more unpredictable cost increases and potentially uncertainties among our customers. So if you go to the next slide, Danielle, based on these trends, then we think we're well positioned. We are a specialist, so not a generalist, and we focus on managing data and information for our customers. We do that through advising, storing, connecting, protecting, and securing, and then helping to drive value. We have and report revenues in 4 main streams to do this. We come from a legacy of reselling hardware and software, which we report on as systems. But we are, of course, provide a lot of value to our customers and not a pure reseller. We do have our own consultancy, skilled consultants who help with both advising, designing, and implementing solutions. We have a highly skilled support organization that helps our customers through providing support services around the solutions they bought from us. And then what we're increasingly moving into is managed services, where we run all of these areas as a service for our customers. So next slide, please. This is then how we put our propositions together to our customers. In the middle of this wheel, you see that we have this, how we work with the data for our customers. And a little bit further out, you see the different areas of how we manage, we provide professional services and support. And then we have a different number of offerings within all of these areas, going from strategic consulting, advising, through backup solutions, disaster recovery, security services, all the way to actually selling and installing the actual storage database solutions, and then connecting it through different types of network solutions. If you go to the next slide, one of the keys that we talk about and our competitive offerings to our customers is this hybrid multi-cloud model. Because we see increasingly that customers are not prepared to and not able to go all the way to the cloud. They have certain legacy applications or certain data that they don't want to send into the cloud managed by big US companies. Instead, they do different things for different types of applications and data. So they keep typically some on-prem. They go to the public cloud for, say, Office 365 run by Microsoft, certain applications that run in private clouds, or they let companies like us manage all or part of this for them. But I think one of our key competitive advantages is to be able to offer this flexibility and the combination of all of these to maximize the value that our customers get out from their systems. And the next slide then, Danielle, is an example, just a customer example that we like to highlight. It's one Fortnox. It's a Swedish accounting services company. They offer us a good accounting software and related services through as a SaaS service. So data, of course, is key for them. It's business critical data for their customers. It needs to be backed up, needs to be available, etc. And we've helped them there to design a solution that we're also running for them, that's flexible and scalable using this multi-cloud infrastructure with the cloud services, where they can run certain things off of their own platform with strong security, strong backup services, but also able to quickly drive innovation on their platform. So a nice one where we do a lot of our portfolio offerings for them. So Daniel, if we go to the next slide then. So that was, our market, our key offerings, an example of a customer that is using a lot of them. Based on that, we are in a market that we think is growing, and especially our managed services offering, we see good underlying growth in the market for that. We have set a revenue growth target of 10% annually. We think about half of that will come from M&A and half of that organically when we look at how much our different markets are growing. And we, of course, expect to keep and capture some market share in there. Through both growth, but also by becoming more efficient, we expect our margins to increase. So we have set an EBITDA margin target of 8% that we expect to reach in the next few years. And one of the areas where we see increased ability both to grow and to grow scalably and improve margins is our services, and in particular our managed cloud services business. So as a strategy, we want to get to a 50-50% mix of systems, so hardware and software, and services, where cloud services or managed cloud services is a large part. So these are our three key sort of financial goals that we expect to reach by delivering on our value propositions to our customers in this market. If we then go to our next slide, as I mentioned, we do see good underlying market demand, but we also see good opportunities to acquire companies to complement our offerings. We typically try to acquire companies in countries where we're already present and look for either complementary customer bases or even more importantly, complementary services, companies that strengthen our offerings. And if we go through, these are our four latest ones. We acquired a big managed services provider in Netherlands in 2019, 220 employees, called Peopleware, focused on cloud-based workspace solutions in particular. Then our next acquisition after that was a year later. We acquired a UK-based company, Cetus Solutions, experts in hybrid cloud solutions, more systems-based, but we've seen good synergies in being able to offer our combined competence as managed cloud services to new customer bases in the UK based on that acquisition. Then in the beginning of last year, we bought Conoa, a primarily consultancy business in Stockholm, but experts in cloud-native development platforms, which is something where there is a really strong demand and fits very well into our expertise in how to build those storage and networking solutions to help customers develop or deploy these cloud-native development platforms for their application development. And then our latest acquisition we did in Germany, in Dortmund, late last year, AHD. Also a little bit bigger in terms of employees, so quite a significant addition to our German presence, and experts in managed cloud services. So they primarily sell managed cloud services, come a little bit further than we had in Germany, very complementary in terms of which customers and which regions they were present in. And I think all of these we're seeing good development, good opportunities for cross-selling and nice synergies in how we develop our portfolio towards increasing managed cloud services. Okay, so if we take our next slide, Daniel, these are then our latest financials, our Q1 numbers. Just have one slide on them. We see revenue-wise, we had 19% revenue growth, so quite strong growth, despite still seeing delivery challenges. A large part of this was through acquisition, so Conoa and AHD in there. We had some positive currency effects also. Underlying, however, we did see organic growth of 5%, both for our systems and our services business. So quite healthy growth. So we're happy about that since we've had some challenges earlier with COVID-related slower decision-making from customers, etc. Then TCV, which is how we measure, that's the value of new cloud contracts that we close. So we closed contracts of a value of 122 million kronor in the quarter, up 56% compared to the same quarter last year. So we're really happy about that. That's one of the strongest first quarters we've seen. First quarter is typically slower for us, and gives them good opportunities to grow our underlying managed cloud services revenues going forward here. And we see also growth in our annual recurring revenue, which is we define as a combination of our two contracted revenue streams, our managed cloud services and our customer support. Strong growth there also, 21%, up to 1.4 million SEK almost on an annualized level. It's very much in line with where we want to go strategically. Our revenue growth in particular also, of course, led to a growth in profitability. EBITDA growth of 26% up to 53 million. And we can see the right-hand side here, you have the longer-term rolling trends that the EBITDA is starting to move up now a little bit as well. So in general, quite a good quarter. Maybe some pressure on gross margins, a little bit more than we typically see, but overall strong growth, good profitability development. What we're seeing as negatives here, primarily that delivery delays are still continuing, so we are not able to deliver or all of our backlog as we typically do. And we also see them in uncertainties related to the war in Ukraine coming in. Although no effect yet on the financials, we do see that there's a risk of, as I said earlier, some cost increases and just general uncertainties. So then I think I only have one slide left if you go to the last one. Yes, so to summarize, we are Proact, a specialist in IT solutions, specifically managing data and information for our customers. We see a positive outlook for our parts of the IT infrastructure market, in particular driven by digitalization in both the enterprises and public sector. And we are continuing to execute on our growth strategy to reach our strategic targets. So that was quickly about Proact, who we are, where we are, and the latest financials.
Excellent. Thank you very much for that, Linda. That was a good presentation on Proact. I have a couple of questions. You mentioned the delivery delays, they continue now. What kind of visibility do you have into the coming quarters? When do you see that getting better, and what signals and signs are we actually looking for in the market to improve the situation?
So what we've seen so far is that our suppliers have had a really hard time forecasting this themselves. So it's been very quick shifts in delivery times. From one day to another, something will get delayed by a month or 2 months to the opposite. Something that we thought was going to be delivered a few months out suddenly sits on our doorstep. So it's been difficult to predict, but on an overall level, we see it continuing approximately as it has, and there is no sort of tangible evidence that it's improving. So when we talk about that, we're seeing signs of improvement. That's when we listen to our suppliers, what they think, and hope that it's going to change. But it's hard to have. There's no tangible evidence yet, really.
Yeah, I see. And they also have pretty low visibility, as they saw improvements in the end of last year, but that has really not materialized, I guess.
Exactly. So I think that's where I think they're transparent to us, but it's rather their visibility is limited. Yes.
Makes sense. If we talk a bit about the cloud solutions then, because this is mostly related to the system sales. From in the cloud offering, and we saw the growth in the TCV here, for example. What's the momentum in that business, and could that gain even more ground in this environment that companies need to change from systems to do their data storage into the cloud at a faster pace, for example? Do you see that?
Yes. So what we see is it's a little bit different in different countries, actually. So some markets are moving faster to the cloud than others. It becomes, I think it's a popular in one country, and then a lot of customers continue on that trend. So like in Netherlands, we're seeing a quick move to cloud from on-prem solutions. Then certain types of customers that we have more of in other countries, say Sweden, we have more large enterprise public customers. They can be a little bit slower to move there. But I think generally overall, we see that the trend is it's picking up pace underlying. As you know, what we saw when we had COVID-19 was that these are bigger decisions for customers. So when we have uncertainties in the market, they tend to sometimes delay decisions. So we had that effect through COVID-19. Now, of course, there is a possible effect of that if depending on what happens with the economic outlook, etc., for Ukraine. On the other hand, it can also accelerate the shift even further. One thing we have seen to a smaller extent is that it can sometimes take a little bit longer for us to onboard customers as well, because we sometimes need to buy equipment to be able to onboard them. And if we have delivery delays there as well, it can impact a little bit. But I think overall, generally, it's more on the positive side, on the negative side for the cloud services versus systems in this area.
True, and it should also help you migrate the sales mix so that you will reach your margin target, I guess.
Exactly.
And just looking at the last couple of years, aggregated organic growth has been pretty low, around 0% for you as a company. But then looking ahead, what should really happen in the market, or what should you do differently to reach your growth target of 10%, where half of that is going to come from organic initiatives? So what's really going to change that organic growth path?
That's, of course, a good question that we're spending a lot of time on as well. I think what we see is the past few years, we've been hit by quite a lot of sort of external factors. And it's so COVID, we initially got a little bit of help by, but then we've seen that in different countries has had negative impacts more maybe than what we thought, and in particular then for the taking decisions on new cloud contracts. And then we've had the semiconductor shortage and now Ukraine. So we see that underlying, if those things hadn't been there, we expect we would have grown more organically. And then in certain countries, we see that when the shift to cloud goes quickly, in Netherlands is a good example, then it's harder to keep the top line up, because it takes a little bit longer for services or cloud revenues to ramp up. So we think we're continuously developing our portfolio. We see better increasing demand for that. We're working to secure that we have the best possible delivery of our cloud services as well. And those things together, we expect to generate that growth. So underlying. And then, the last factor, as you know, with our systems business being very lumpy, it's necessary to look at longer term trends to understand really the underlying growth.
True, that makes sense. I also had a question on the acquisitions and the slide you showed us with the 4 logos. Do you rebrand the acquired companies into Proact after some time, or do you keep them with their old brands? I mean, Conoa had a really strong brand in Sweden, for example. How do you work with that?
Yeah, so since we're acquiring at quite a sort of a nice pace, so we have time to do whatever we feel is best for each individual acquisitions. Over time, typically the acquisitions that we've done so far, we want them to be tightly integrated into what we do, especially when it comes to services, to be able to leverage as much as possible. And so in that journey, we quickly typically rebrand them to like Conoa, a Proact company. Then both Cetus and Peopleware now are completely rebranded to Proact. So after a couple of years, typically we do rebrand. When it comes to a company like Conoa, with a strong brand, both as an employer and also to the market, it may take longer. I mean, we will do an individual judgment based on what we think is the best way to get the synergies out of our acquisitions.
Okay, I understand. I have a final question also on the margin target, the 8% margin target. You haven't really been that close to the target in the last couple of years. That's a really good ambition to have. What is mainly going to take you there? We see the system services sales mix of 50-50%. Is that the only secret here, or anything else that needs to happen in the business to take you to the 8% margin?
It will, of course, we always need to deliver better on all our parts of our business. But as we see it, it's that improving further our delivery capabilities and making sure that we create enough value for our customers to be able to keep pricing up. That, and then in combination with that we do have scale effect, in particular in the services and the cloud services business. We see that getting that value out of our services and the scale effects, we will be able to get to the 8% EBITDA margin.
Excellent. That will be interesting to follow.
Yeah.
And see when you get there.
Yeah,
absolutely.
Definitely.
Yeah. So thank you very much for the time, Linda. Good presentation
you.
on the company, and nice to talk to you again. And thank you very much for everyone who listened in.
Thanks so much for having me.